When you look at those rapidly moving market charts, it's pretty easy to feel overwhelmed, isn't it?
Oh, definitely.
But what if there was like a really precise way to navigate that volatility?
Yeah.
To capture those tiny lightning-fast movements consistently, making them add up to something real.
Yeah, that's the ultimate challenge for a lot of traders, I think. Finding an edge in markets that just seem to shift on a dime. The appeal of quick action, it's powerful.
Absolutely. And that's exactly what we're diving into today, scalping. It's a strategy that gets, well, a lot of attention from anyone curious about those rapid market moves, and for good reason. So our mission in this deep dive, it isn't just to list a bunch of indicators. It's really to cut through the noise and unveil a powerful step-by-step approach. We want to identify high-probability entries, specifically optimized for the 15-minute chart.
Right.
The goal is for you, listening, to walk away with a crystal clear, actionable understanding, without feeling totally lost in all the details. We're combining two pretty potent indicators here. The first one is the Bollinger Band's breakout strategy. So once you find that on your trading platform, TradingView perhaps, what's the crucial next step? The customization.
Yes, customization is key here. This is where we fine-tune it specifically for scalping on that 15-minute chart. So in the Input tab, you'll want to change the SMA length. The default is usually 55. Change that to 60.
60. Okay, why 60 specifically?
Well, that slight increase in the simple moving average length, it helps smooth out some of the, let's call it noise, the rapid fluctuations you inevitably see on a 15-minute time frame. It makes the trend signal from the middle Bollinger Band a bit more reliable, less prone to false signals, which is obviously vital when you're making quick entries.
That makes sense. Filtering the noise.
Exactly. And then just for visual clarity, head over to the Style tab and maybe hide any unnecessary quantity options or plots. Just keep it clean. It's all about focusing on what matters.
Okay, cleaner view, SMA at 60. Got it. That deeper insight into why we adjust the SMA is really helpful optimizing for that 15-minute pace. So once it's on our chart and customized, how do we actually interpret the Bollinger Bands themselves? What are they telling us?
It's actually quite intuitive how they work. These bands, they dynamically outline potential support and resistance levels. So the upper band, usually shown in red, that acts as a kind of flexible resistance level. It indicates where the price might run into selling pressure.
Right.
Conversely, the lower band, typically green, functions as dynamic support. It suggests where buying interest might step in. And that middle line, that's your core trend signal. It's essentially the average price over that 60 period we just set.
Okay, dynamic support and resistance and a trend line in the middle. So how do these translate into actual buy or sell signals for a scalper who needs to move fast?
It's surprisingly straightforward once you know what to look for. For a buy signal, you're looking for two things to happen. First, that middle line needs to turn green. That signifies a potential bullish shift in momentum.
Yeah.
But, and this is crucial for our strategy, the price itself must cross and hold above that green middle line. That combination tells us we're not just seeing a potential trend change, but the price is actively participating. It's confirming that move above the average.
Got it. So green middle line, A and D, price above it.
Exactly. And for a sell signal, it's just the mirror image. The middle line turns red, indicating bearish momentum is picking up, and the price needs to move clearly below that red middle line. That confirms the downward pressure is real.
That's a great starting filter. Price relative to the colored middle line. Now, let's bring in our second tool to really sharpen things up, to confirm those high probability setups we're after. This is the top-bottom indicator. Again, once you find it, you'll want to look for the one by the author. Let's see, I believe it's Kvankstow's Bilgic you'd search for?
Yes, Kvank's indicators are well known.
Right, so once you add that specific one, there's one critical adjustment to make here too, correct?
Yes, just one main tweak for this one. Go into its settings, into the Input tab again. You'll see a bottom period. The default is 14. You'll want to modify that to 21.
Okay, from 14 to 21 for the bottom period. And the thinking there, similar to the Bollinger Bands.
Pretty much, yeah. Similar logic. Increasing that period to 21 helps filter out some of the minor market chatter on the 15-minute chart. It just ensures that when a top or bottom signal actually prints on the chart, it's a more robust indication of a potential exhaustion point or reversal. Gives us higher confidence for our scalp entries. And the Style tab for this one, you can generally leave that as is.
Makes sense. More robust signals. And how do we read the signals from this top-bottom indicator? Are they just labels?
This one's very direct. almost like a traffic light for potential turning points. When you see a bottom label appear below a candle, that's your buy signal. It's indicating a potential low point where the price might be about to reverse upwards.
Simple enough.
And when a top label shows up above a candle, that's your sell signal.
Yeah.
It suggests a potential peak where the price could reverse downwards. It's a really clear visual cue.
Okay, this is where it gets interesting, isn't it? Combining these two, because bringing these distinct tools together, it's not just about getting more signals, is it? It's about creating that powerful filter for those best trade setups, what I talked about earlier. How do they work together to really sharpen our edge?
Yeah, this is the core of it. The combination provides this critical layer of confirmation. It helps you filter out the weaker, maybe ambiguous signals and lets you focus only on the highest probability scenarios. So let's walk through exactly what needs to align for a good long or buy trade.
Okay, let's do it.
First, you need the Bollinger Bands to give you that clear, long signal we discussed. So price has to be above the middle line, and that middle line must be green. That confirms the underlying bullish trend for our time frame.
Right, condition 1.
Condition 2. At the same time, or very close to it, you need the top-bottom indicator to display a bottom label below the price action. That signals a potential turning point upwards.
Okay, BB buy signal plus TB bottom label.
Exactly. And then the final piece, right as you're thinking of entering, you want to see a confirming green candle actually form, a solid green candle closing. This just ensures that immediate momentum is actually moving in your favor.
Green candle confirmation. Got it. So Bollinger Bands, green and price above, top bottom shows bottom, and a green candle forms. That's the trigger.
That's the trigger for a high probability buy setup.
And once all those conditions click into place, how do we manage the risk? Where do we set the stop loss and the target?
Right. Risk management is absolutely crucial in scalping. Your stop loss, which you should always use, goes strategically just below the lower Bollinger Band. So you're using the indicator's own dynamic support level as your logical point where the trade idea is invalidated.
Okay, below the lower band. Makes sense. And the target?
For the target, we aim for consistency. We're looking for a 1 to 1.5 risk-reward ratio. So if your stop-loss distance represents 1 unit of risk, your target price is set at 1.5 units of potential profit away from your entry. This ensures that over time, your winning trades are larger than your losing trades.
1 to 1.5 risk-reward. Clear. Okay, what about the flip side? The best setup for a short or a sell trade? Is it basically just the mirror image?
Precisely. It's symmetrical. For a high probability sell setup, you need the Bollinger Bands to give you that strong short signal. So the price must be below the middle line, and that middle line must be red.
Okay, BB sell signal.
Then, simultaneously, you need the top-bottom indicator to display a top label above the price action, confirming a potential reversal downwards.
Right, TB top label.
And your final confirmation, your trigger, is seeing a solid red candle form and close. That indicates immediate selling pressure.
Red candle confirmation. Okay, so BB red and price below, TB top label, red candle confirmation.
That's your high probability sell setup.
And for the sell setup, stop loss and target same logic, I assume.
Exactly the same logic, just flipped. Your stop loss will be placed just above the upper Bollinger Band, using that dynamic resistance as your protective ceiling. And again, consistently, you're targeting that same 1 to 1.5 risk-reward ratio.
Yeah.
That consistency in the risk-reward approach, applying it the same way for both buys and sells, is really a vital pillar for the long-term viability of the strategy.
It sounds incredibly systematic, and that's exactly what scalpers need, right? Discipline and a system. So this all sounds great in theory, but what does it look like when the market's actually moving? We looked at some real-world examples that show how this combined strategy performs, don't we?
We did, yeah. And these examples really highlight how applying these strict conditions helps cut through all that market noise. For instance, we saw a really textbook buy setup on gold on the 15-minute chart.
Okay.
All the signals we just laid out, the Bollinger Bands confirming the long trend, price above the green middle line, the top-bottom indicator flashing a bottom label, and then that confirming green candle, everything aligned perfectly.
Wow.
A buy order was placed right there on the close of that confirming candle, stop below the lower band, target at 1.5 R, and the trade, it just moved cleanly up and hit its target. Really showcased the precision you can get.
So it's not just theoretical, it actually lines up and works in practice.
Exactly. And we saw similar things on the sell side too. There was a compelling sell example where, again, all the conditions for a short trade were met. Bollinger Band showed price below a red middle line. The top bottom gave that top signal, and a solid red candle confirmed the entry. The trade was placed, stop above the upper band, and boom, it hit its 1.5R target pretty efficiently.
Nice.
So that really underscores the importance of trusting the setup once your conditions are met and not getting shaken out by, minor fluctuations along the way.
That point about patience within the system is so critical, isn't it? Because even with precise entries, the market, well, it rarely moves in a perfectly straight line.
Never does.
So pulling all of this together then, what really stands out about this synergy? The combination of these two specific indicators with these specific settings.
I think what's truly fascinating and powerful is how the combination of the Bollinger Band's breakout strategy and the top-bottom indicator acts as this really effective filter. It lets you pinpoint those often elusive high-probability entries for scalping trades. It moves you away from just guessing or reacting impulsively and towards systematically confirming your entries based on multiple factors aligning. The real power comes from that overlapping confirmation, not just relying on one signal in isolation.
And you've hammered home the point that the key is using this specific strategy on the 15-minute chart and following those steps, those settings meticulously. It really highlights that while the tools themselves are powerful, things like practice, doing your back testing, and above all, discipline, those are the absolute essential pillars for any trader looking to use this or really any strategy effectively.
Absolutely. Those aren't just nice to haves. They are fundamental, non-negotiables for any kind of long-term success in the markets, especially something as demanding as scalping.
So what does this all mean for you, our listener, thinking about this?
Well, consider how understanding just two indicators, when you apply them with this kind of precision, with those specific optimized settings we talked about, and with that unwavering discipline, how that can potentially transform your approach to these rapid short-term market movements.
It takes something that seems incredibly complex, maybe even chaotic, and actually makes it feel manageable, maybe even, dare I say, somewhat predictable in its setups. It really makes you wonder, doesn't it? What other seemingly complex or chaotic systems, maybe in life or perhaps elsewhere in the markets, might actually be simplified or even mastered if you just find the right tools and apply them with the right disciplined mindset?